Welcome back, everyone. Okay, let's take a deep breath. 2025 is officially in the rearview mirror.
Finally. And honestly, it sounds like the real estate world is letting out a collective sigh of relief, too.
Seriously, we just got the fresh numbers from Inman Intel's December survey. And spoiler alert, that scary dip in November, it might have just been a false alarm.
A blip. We love a good blip. So are agents actually feeling good about 2026?
They really are. According to the Intel Client Pipeline Tracker, sentiment rebounded in December, and not just a little bit.
Yeah, I was looking at the charts. It's actually the highest level observed to end a calendar year since they started this index back in 2023.
That is wild, considering how panicked everyone was just a month prior. November looked like the start of a downward spiral, but December said, hold my beer, we're back.
So, for our listeners who aren't glued to the raw data like we are, break down the score. What are we looking at?
Right, so the methodology is pretty cool. A score of plus 20 is extremely positive, like everyone agrees pipelines are booming.
And minus 20 is, well, panic mode, like back in September 2023.
Exactly. We aren't quite at plus 20 yet, but we are definitely out of the danger zone. It's cautious optimism, but heavily leaning on the optimism.
Okay, so who is driving this bus? Is it sellers finally listing their homes?
Actually, the big headline here is the buyers. When you dig into the components, there was a massive shift in the quality of buyer pipelines.
That makes sense. I feel like buyers have been sitting on the sidelines for 2 years, just waiting for a signal.
Totally. And compared to the 4-month period ending in October, December's buyer sentiment was way stronger.
The big question is why? Why the sudden change of heart in December?
I mean, it's gotta be the rates, right? The mortgage rate environment improved, and we actually saw transactions happening.
Exactly. Nothing boosts an agent's mood like seeing pending sales actually cross the finish line.
It's the difference between I have a lead and I have a paycheck. That definitely changes how you answer a survey.
And I have to play devil's advocate here. We see this pattern a lot. Agents tend to get rosy-eyed in December and January.
The new year, new me energy.
Precisely. In previous years, that optimism got crushed by spring. Remember 2024? The NAR settlement announcement dropped and everyone's expectations got flipped upside down.
Oof, don't remind me. So we're hopeful, but we know the spring market is the real test. Let's circle back to that November scare for a second. Why did everyone freak out if the market was actually stabilizing?
Intel looked into that. It was weird because the sentiment dropped even though pending sales data wasn't that bad.
Was it the government shutdown drama?
That's the leading theory. The economic anxiety around the shutdown plus maybe some clients getting cold feet temporarily. But clearly it didn't stick.
It's funny how psychology works. One bad news cycle and we think the sky is falling.
But the data corrects us. When you look at the component scores across the board, buyers, sellers, past year, future year, everything shifted positive month over month.
Huge shifts, which probably says more about how grumpy everyone was in November than how perfect things are now.
Fair point. But hey, a step forward is a step forward.
Just to give credit where it's due, this data comes from over 400 responses from the Inman community between late December and early January.
So this is fresh off the press. Real agents, real time.
Exactly. It's preliminary, but it covers agents, brokerage leaders, lenders, the whole ecosystem.
It's good to have a pulse on what peers are actually feeling, not just what the headlines say.
So, the verdict? Are we calling 2026 the year of recovery?
I think we're calling it the year of please let this stick. The temporary blip of November is over. Buyers are back in the pipeline and agents are ready to roll.
I'll take it. Here's to a busy spring. Thanks for tuning in, guys.
Catch you on the next one.